Welcome back, traders. Thanks for joining me here today. In this short video, I will show you the best Heikin Ashi strategy for day trading in the Forex market. This strategy can help you to increase your winning rates in the market. I believe you are familiar with the three most popular types of chart, which are the Japanese chart, the line chart, and the bar chart. But do you know there's another type of chart which uses a totally different technique to display price movements? This chart is called the Heiken Ashi. To switch your chart to the Heiken Ashi chart on TradingView platform, left-click on the option Bars Style here, and left-click to select the Heiken Ashi chart. So what's the Heiken Ashi chart all about? The Heiken Ashi is a charting technique used to display price movements at a glance, although it looks similar to a traditional Japanese candlestick chart. But the difference is the method in which the candlesticks are calculated and plotted on the trading chart. The Japanese candlesticks are primarily best for detecting trade breakout setup zones, entry levels, and signaling potential reversal zones, while the Heiken Ashi strategy can help you to decide how long to hold on to an executed position or when to exit a trade setup. As a trader, how can you implement the Heiken Ashi strategy to trade the Forex market? There are 5 basic ways to use the Heiken Ashi charts as a trader, and they are: Number 1. Utilizing green candlesticks for an uptrend signal. Number 2. Utilizing green candlesticks with no lower shadow or wick as an uptrend signal. Number 3. Utilizing red candlesticks for a downtrend. Number 4. Utilizing red candlesticks with no upper shadow or wick as a downtrend signal. Number 5. Utilizing small candlesticks bodies showing long upper and lower shadow as a level of potential reversal of a trend. How can we implement the green candlesticks or the green candlesticks with no lower shadow in an uptrend for a buy strategy in the market? To effectively have a high winning rate with the first and second Heiken Ashi strategy, we need to apply them in a trending bullish market. So let's search for a bullish trending market. We can see from the swing low here, the market switched from the bearish trend into a bullish rally. At the price level of 1.999, we can see there was a formation of a well-defined key level. Let's study the support level here. We can see how the bearish pullback was rejected into a bullish continuation. Here comes the continuous formation of green candlesticks after consolidation here. Study the shaven bottom of the first green candlestick on this bullish move after the doji candlestick. The formation of the shaven bottom of the candlestick signaled reversal of the bearish move into an uptrend move. Likewise, the continuous formation of the green candlesticks gave more confirmation of bullish activeness in the market. The continuous formation of the green candlesticks would be a reason to add more to our buying position in this bullish rally. This strategy works best when combined or formed at a well-defined support structure in the market. Next is to show you how to apply the third and fourth Heiken Ashi strategy in a bearish trending market. This involves utilizing the red candlesticks or the red candlesticks with no upper shadow for a sell strategy in a downtrend. To effectively have a high winning rate with the third and fourth Heiken Ashi strategy, we need to apply them in a trending bearish market. Here's a strong bearish trend. Price was rejected after a bearish test here into a short bullish high-low swing. Price made a bearish reversal and broke the support level here. Before price broke the support here, we can see there was a formation of a shaven top of the bearish candlestick which broke the support swing low here. The second candlestick to the breakout shaven top also carved a shaven top bearish candlestick. This signal gave an indication of a more bearish rally to come. And we can see the continuous formation of shaven head bearish candlesticks in this aggressive bearish move downward. The continuous formation of red bearish candlestick suggests an opportunity to add more selling position in this bearish trend. Here's another good example of Heiken Ashi strategy for a selling continuation setup in a downtrend here. We can see the 3 consecutive red candlestick formations with absence of upper shadow. This gave an indication of continuation of the existing bearish trend. Now let me show you how to implement the Heiken Ashi strategy for the reversal of a trend. To implement the Heiken Ashi strategy for the reversal of a trend, we have to watch out for the formation of small candlestick bodies showing long upper and lower shadows at an extended move of a trend. There are 3 ways to implement the 5th Heiken Ashi strategy for reversal of a trend. Number 1. For counter trend move. Number 2. For continuation move. Number 3. For a total change of a trend. To implement the 5th Heiken Ashi strategy for reversal of a trend, traders need to watch out for the information of small candlestick bodies showing long upper and lower shadows. Then execute an opposite position against the current trend. As we can see at this high swing here, the formation led into a short bearish counter trend move. And at this swing high-low here, it led into the continuation of the bullish trend. Most times, the formation of small candlesticks bodies showing long upper and lower shadows can be combined with chart pattern formation analysis to detect breakout setup in the market. Here's an example of bullish breakout on the inverse head and shoulders at this low swing here. Likewise on the bullish pennant breakout here. To be on the safer side, utilize it for the total reversal of a trend if the small candlesticks bodies showing long upper and lower shadows form at a defined key level structure, or for reversal in combination with chart pattern formation.